Welcome back to Alpha Recap. Markets are closed for the day, and it was a wild one heading into the long weekend. As always, if you have questions, you can reach us at stockalpha.ai. What really stands out here is the sheer volatility we saw across microcaps and some big governance news that landed late in the session.
Yeah, absolutely. Good to be here. Today felt like two shows in one: speculative fireworks in the small cap corner and a hard-nosed corporate governance story in the mid-cap space. I mean, when you step back and look at this, both themes can create outsized moves after the close.
Right. To set the scene, markets closed the session volatile and somewhat bifurcated. Large cap tech and a few defensive areas held up, while penny stocks exploded and then collapsed in some cases. We'll walk through the main headlines: Microcap Mania, the Prestige Consumer Healthcare Governance Probe, hedge fund rotation out of airlines into big tech and mobility, and the geopolitical chatter from a high-profile China visit.
Let's start with the microcaps, since that really dominated the tape volume-wise. We saw dozens of names post triple and quadruple-digit percentage swings on outsized volume. And the extremes were, frankly, eye-popping.
And the number that really caught our eye? One small name rallied about 17,900% in a single session. Another surged around 8,000%. And a third jumped about 1,600%. At the same time, some names collapsed. We saw a name fall roughly 96% in one day. Big moves.
Wait, really?
Yeah, these were parabolic, single-session moves, often on very uneven liquidity. Some winners traded hundreds of millions of shares. For example, one of the biggest winners printed about 506 million shares, which tells you retail and fractal liquidity were all over this.
So what explained those spikes? Short squeezes, retail momentum, or something else?
A mix. In simple terms, low liquidity plus a concentrated burst of buying can dramatically bid up a thinly traded stock. Add social media-driven momentum, options activity that forces delta hedging, and occasional quote or exchange anomalies, and you get vertical moves. When everyone piles in at once, prices can leap. When that attention shifts, mean reversion can be brutal.
Right. And the other thing is, these moves were not uniform. Some names retraced quickly, others sustained a little longer when there was an actual corporate announcement or filing behind the move.
The downside list was just as dramatic. Several names were down 40% plus. One was down about 96%, and a number of others collapsed by more than 40%. That kind of two-way action creates serious headline and risk management headaches.
Big swings.
Not for the faint of heart.
Definitely not.
Moving on to one of the day's most consequential headlines: Prestige Consumer Healthcare. A shareholder law firm opened an investigation after analysts flagged missed management projections, specifically a free cash flow target of about $245 million. And an adjusted gross margin goal in the high 50s, and after reports of an undisclosed acquisition of about $150 million.
Analysts noted that raised a lot of governance and disclosure questions. When companies miss the kind of cash flow and margin projections they put out, and then there's an acquisition that wasn't disclosed clearly, that creates regulatory and legal risk. This tends to push volatility higher while people wait for SEC filings or an 8K.
Exactly. To be clear, this is about information quality and control. A probe like that can trigger follow-up filings, restatement risk, or shareholder litigation. Analysts said peers in the consumer healthcare group could see sentiment bleed over as well.
So what should listeners be watching on that front? Not investment advice, just the signals. Look for official disclosures, 8Ks, and any comments from the company or the investigating firm. Those are the items that typically resolved a lot of uncertainty.
Right. And honestly, I was a bit surprised by how fast that governance story made headlines alongside the microcap noise. It really underscored that governance issues can be market-moving even amid other big tape noise.
Shifting gears. Another big theme was hedge fund rotation. Reports said a well-known manager exited positions in the big three U.S. airlines, Delta, American, and United, reallocating into Amazon and Uber. That highlighted both pressure on airline margins from rising jet fuel costs and a tactical move into large-cap tech and mobility winners.
Right. The takeaway was more tactical than structural. Data suggested rising energy and fuel costs were compressing airline earnings power, which prompted a re-weight into companies with more durable cash flow or secular demand. Analysts described this as a tactical sector rotation, rather than the start of a permanent regime shift.
Yeah, that tracks. If fuel costs stayed elevated, the airlines would be under continued pressure. And that can create relative performance divergence between cyclical travel names and megacap platforms.
Now on geopolitics. After a high-profile visit to China, a former president urged China and Taiwan to both cool it. Markets reacted to the diplomatic tone as a potential de-escalation, which traders noted could reduce near-term supply chain risk for sectors like semiconductors and exporters. Think Nvidia and Apple. If that rhetoric led to concrete follow-through.
But the caveat was big. Analysts pointed out that words without deliverables don't eliminate volatility. Traders said they would parse any communiques over the long weekend to see if there were real policy steps. So the narrative could reduce a tail risk premium, but only if specifics showed up.
Exactly. With markets closed for the long weekend, a lot of the moves we saw were positions squaring into the break. That created an added layer of weekend risk. Headlines over the break could cause outsized moves on Monday.
Quickfire checklist for Monday, then. Analysts flagged 5 priorities. 1. Official filings and 8Ks for the microcaps that spiked or collapsed. 2. Any follow-up communiques from the China visit. 3. Jet fuel price trends and airline commentary. 4. Volume confirmation on parabolic names, whether momentum held or evaporated. And 5. Any legal updates on prestige and peer reaction.
Good list. And for listeners tracking small cap moves, analysts recommended checking options open interest and borrow rates for names that had squeeze dynamics. Those are often the canary for continued pressure.
Short 1.
Short 2.
Short 3.
A few patterns emerged from the briefs worth repeating. Retail and speculative flows continued to dominate microcaps. Governance and disclosure risk re-entered the spotlight with the prestige story. And a tactical rotation into large tech and mobility away from cyclical travel showed how energy costs can shape flows.
And just to be clear on tone, analysts noted elevated volatility and recommended relying on official filings and company disclosures to confirm any apparent catalysts. This is market analysis and informational only, not personalized advice.
Takeaways in a nutshell. 1. Microcap Mania produced wild one-day moves that will need filings and volume confirmation to be believable. 2. The Prestige Governance Probe raised regulatory and legal risk that could drive further stock and peer volatility. And 3. Hedge fund flow changes highlighted tactical rotation pressures driven by rising fuel costs and a tilt toward large-cap tech and mobility.
Final reminders. Monitor 8Ks. Keep an eye on volume patterns Monday. Watch jet fuel dynamics for airline sensitivity. And look for any concrete follow-through on the China-Taiwan commentary before assuming reduced supply chain risk.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. Have a good long weekend, and we'll be back after the open to parse what changed.